Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating the session tonight with Rob Roy. I'll introduce Rob here in just a few moments, but as always, we have to go through some housekeeping details. First and foremost is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website to be read in full detail there, or feel free to take a screenshot if you like, but that's the main point to take away. All right, so for this session, we have one method of asking questions as we're live streaming to multiple different platforms. Rob has a brief question portion at the end of the session after he goes through his general presentation and then goes through some case study considerations. So as you'll see circled on the screen, we have the Q&A window for our Zoom audience. Please, at any point, feel encouraged to write your question in through that window, and potentially it will be addressed once we get to that portion. Again, we are live streaming to YouTube, Facebook, Twitter, and of course our Zoom audience. So we are going to take questions from all of those different platforms with the time that we have. So if we don't get to your question, just know it has nothing to do with the validity. We just only have so much time. So if we don't get to your question, also take that as encouragement to attend the insiders meeting. And there's a 45-minute portion solely based on answering questions for subscribers. So obviously a much higher likelihood of getting your question addressed there if it doesn't get addressed in this session. Lastly, we have the chat window as well. So any support related queries I can handle in there, or for any interaction amongst everyone on the webinar, please feel encouraged to use that window. One note to make is by default, the 2 at the bottom goes to hosts and panelists. So be sure to change that to everyone. That way your message will be visible to everyone on the webinar. So interesting with Bitcoin, it really wants to break 24, but just can't seem to, whereas Ethereum had a pretty nice rebound. So I'm interested to hear Rob's thoughts. He always goes through his general Bitcoin analysis, but maybe he might have more of an extended crypto session for this webinar this evening. So I will get out of the way, stop rambling on, and introduce who we're all here for, the man of the hour. That's Rob Roy.
Thanks, Zach. Thanks, everybody. Welcome to all of you that are viewing on all the multiple live streaming platforms. We were happy to have you here. So you can see we will talk about the U.S. market. If you're new to TradeFinder, we'll go through any closed trade alerts. Got a couple of them to look at, a couple interesting things that we've done for our Elliott Wave Options alert subscribers. Then we'll go through and look at trade ideas, the case study considerations, I call them, that we identify each and every week here at TradeFinder, and see there's a few of them that might be considered still open. If you've been following along with them, we'll try to see if we can find one tonight. It's been a little challenging the past couple of weeks if you've been watching. And then at the end, as Zach mentioned, we'll do a little bit of a Q&A with whatever time we have left, get to as many questions as we can. So that's it. That's how TradeFinder works. So again, welcome to everyone. Appreciate you being here. So if we take a look at the market, you can see that we're kind of bumping our heads here right underneath this 420 level. We knew 420 was going to be tough to get through. So a little bit of consolidation here, not that big a deal. If we look at the moving averages, you can see that we had gotten just a little bit overbought. So if I walk this back a bit, one of the cool features of Profit Source here is you can walk things back and take a look at them. You can see that there was some separation there with where we were back on the 29th of July from the 10-day moving average. So consolidation, I mean, if you're worried about movement down today, I really wouldn't. Just some consolidation underneath that 420 level. And then when we add volume in, you can see that volume is dropping off. If you're bullish, that's what you want. You want volume to be going down as you're consolidating. So you're consolidating under a major point of resistance, volume's dropping off. So the fact that we moved to the downside today is meaningless. It's just coming back down towards the 10-day moving average. Now, it doesn't mean that we can't pick up steam and move lower from here. Just saying that the fact that we moved to the downside today on really low volume when we were overbought, that's not a negative. There's times when you have a reversal on big volume, those things are negative. This is not. So we're still going to wait and see here if we can make a run at breaking above that 420 levels. We've noted numerous times in all of our recordings. And if you're watching on YouTube or any of the other social media services, if you haven't visited our YouTube channel, love for you to do so. Elliott Wave Options on YouTube. We've talked about this Wave 5 here right at the 61.8% extension level. We had the Wave 4 right at 38.2. I mean, this is just classic Elliott Wave stuff. It doesn't get any more classic than what's occurred. And so we'll see if we can mount some volume, mount a run to break above that 420 level, or is it going to turn us back? For those of you that are bearish, you can look at, all right, well, we're consolidating here at a level underneath that Wave 4. So this could have just been viewed as an oversold bounce. I know some of you don't like it when we talk about the fact that there's two potential movements here, but all we do is read the charts. And, you know, if you're going to pick a direction, then pick a direction. But if you're going to listen to the market, then you have to be aware of when the market is telling you, hey, be careful right now, maybe keep some powder dry and be a little bit cautious and let the market tell you where it's going to go. There's enough move when the market makes good, strong directional moves to trade then. There's times to trade and there's times to be a little bit cautious and quiet. And I just think with this consolidation here on low volume, this is one of those points. 420 is not that far away. And if we break above 420, there will be some significant short covering volume and we'll have a nice move, a continuation of this move, and you'll have plenty of room to make upside trades. If we roll over, we're probably going to at least test this Wave 5, if not go down to 100% extension, and there's plenty of room to the downside then. So why guess right now? It doesn't make any sense. There's no reason to. This is just one of those times where you say, okay, we're overbought, we're consolidating it. Let's see what happens from here. It's the way I view it. And so when we look at this and we're a little bit, okay, we could go either way from here. Well, let's look at the VIX and see what the VIX is showing us. Pretty big downward move there in the VIX. We broke below 25, which is, for the oddest of reasons, become the new support resistance level. And we broke below it and we back up to test it. Look at that, a doji on the VIX. How about that for indecision in the market? Even the VIX has some indecision. So we're consolidating on low volume on the S&P. The VIX is right underneath resistance, if you will, at 25 with a doji. So anything can happen in tomorrow's trade, at least based on the VIX. So maybe what happens tomorrow gives us an insight as to where we go from here. Do we go higher from here and make a run at breaking above 420? Or do we bounce back above 25 on the VIX and that starts something more to the downside? We'll see. The market was a little bit jittery this morning. If you were watching the futures, they were down quite a bit. As you probably are aware from the news, Nancy Pelosi arrived in Taiwan. And so China was not happy about that. They were flying warplanes around. So there was a little bit of skittishness. Is something going to happen? Nothing happened. It was just kind of China showing that they weren't happy about what was going on. There are elevated tensions there between China and Taiwan. Definitely something to keep an eye on to see if something materializes from there. Now we have monkeypox with multiple states. The WHO has already created a state of emergency. Now we've had a couple of states here in the US that have called a state of emergency. I mean, when you look at the size of the outbreak versus COVID, it's not even in the same realm, but perhaps they're just getting ahead of it, whatever. Who knows exactly what's in the minds of the health officials. I'm not a healthcare person, so I don't know. It's just crazy world that we're in right now. You have to agree. So how does the VIX continue going down like that with everything that's going on? Well, then you can look back and say, but we've been elevated for quite some time, and that makes sense with everything that's been going on. So just thought we'd take a quick look at the VIX with what was going on currently in the market. So let's go ahead and take a look at the TNX interest rates. This, I think, is something to pay attention to. This outside day here on the rates, big day here, open lower, traded back to the upside. Now that could be significant, and you might think that, well, if we start moving higher on rates, that's going to be bad for the market. Not necessarily. A lot of people think that rates have been going down. We've been speculating on why in the world are rates going down when the Federal Reserve is raising rates. And there was some speculation that the Federal Reserve was going to do that 75 basis point raise and then pause. I don't think that's it. I don't think they're done. I think they're going to keep going. I think it was talking about potential economic weakness ahead. And if we can turn and head back to the upside, believe it or not, that actually would be bullish for the market to a point. Obviously, if rates get too high, that's a negative, but a little bit of a positive there as far as the potential movement. So we take a look here and you can see that rates have stopped right at the 61.8% extension, where we really should go down to the 100% extension. If that does occur, then that's a negative for the markets, because that really is factoring in some greater economic weakness. I think there's a lot of people that are still thinking this is going to be a shallow recession. The GDP report was negative, but barely. So at least at this point in time, it's not a significant recession, but we'll see where things progress from here. But that outside day shows that something will occur with rates likely tomorrow, some sort of a move of significance. Then we look at the dollar. The dollar's backing off a bit. Is that because of economic weakness? We got to the point where, and if you've watched any of these recordings, that I am a fan of a stronger dollar. I wasn't a fan when it went vertically up. It was getting too strong. It went right smack into the middle of the tap box here, time and price projection. So the Elliott Wave forecast absolutely spot on nailed where the dollar was going to go, just dead center there. And then we've backed off, and now we bounced off that top of the wave 3, which I think we talked about last week was likely a point where we would come down because it coincided with the 50-day moving average. So that's exactly where we went on the dollar. Now we see, does the dollar hold here and make another run higher? Excuse me. Oh my goodness, pardon me. The tea. Second webinar of the day, so please forgive me. We did one for educational event for AGT earlier today. So for those of you that may have watched that, really good presentation on calendar spreads. So we'll see if we bounce back to the upside. If we break lower from here and interest rates break lower, I think we have to be really concerned that this recession is a little deeper than maybe what's already factored into the market, and that could turn us to the downside on the S&P. All right, before we take a look at the rest of the markets, I did want to share with you last week when we looked at RH, who said that it was a speculative position and that we have a speculative portfolio at Elliott Wave Options. It's not one of the ones that we have specific search criteria for. Just if we see something that looks interesting, then we'll go ahead and pardon me, send it out into the speculative portfolio, and it's exactly what it means. It's speculative. Our alert subscribers can choose to take it or not. It's just something that we see, not one of the official portfolios or the searches, but every one of the alerts that goes out has one of these pages here with the alerts. And here are two. We did two butterflies in the energy sector, one on natural gas and one on oil, and they were just weeklies. So we just did 1 week positions there. You can see 9 and 8 days. And on the USO position, that was a nice winner. So if we take a look at that one, you'll be able to see that we had this move down towards support. Looked like oil might move back to the upside. 70 and 90 were the areas of support resistance. Moving back to 80 would be the midpoint. And again, this is only a week, so this was very speculative, especially with the butterfly. And that worked out really well. It's exactly what oil ended up doing. It moved right to the midpoint there, as you can see. Now, we did close these out a day early, and as it worked out, that's a lot of risk though, but as it worked out, if we had gone into Friday and been very, very quick, because things did move the other way, but early in the trading day on Friday morning, both of these positions would have done better. This one would have been over $9 at one point. So a 40% gain in a week could have been more like an 80% gain within the week. But that's a risk of going in the last day in a butterfly. You've got a 40% gain with 1 day to go. Do you flip the coin? Speculative portfolio. That's the kind of thing that you have to decide on your own on those type of things. And then with UNG, that one was a 24% loss. So between the two weekly butterflies, we still netted a gain between the two of them, but actually natural gas continued down because it had gone too high was the issue there. It ran to the upside and actually got out and within just a week's time. You'll see this. It got out of the butterfly top strike and then came back down. So again, here you are on Thursday and you're up here a couple days sooner. You're like, yikes. And then it came back down. We have the 10-day moving average right here. And so you're able to go ahead and close this out at a small loss. You put two speculative portfolios on, you net a gain in a week. And so you're happy with that, right? It still was 16% gain between the two positions within 1 week. That's not bad. But this one did open lower on Friday morning. And believe it or not, had you waited until Friday morning, that would have been profitable. So that entire loss would have been erased, but not by the end of the day. It did reverse and go back to the upside. So at that point in time, you would have had to been nimble in the morning. But that's why we talk about these as being speculative. And so you're on Thursday, you got a net gain between two weekly trades. So you go ahead and take that, or you roll the dice. You know, that you have to make that decision for yourself. Had you, in this case, rolled the dice, you would have ended up in a heck of a lot better position than a 15-16% gain on the two positions. But you know, that's what we look at when we're looking at speculative trades. So certainly you don't have to follow along with what we do. You can make your own decisions. But I thought that might be interesting to share with you because it's something a little bit different, the speculative portfolio, that not based again on specific criteria from our searches through Elliott Wave, etc. All right, so now let's go back and take a look at some of the other markets. We'll look at the diamonds. So we take a look at the Dow, see what that looks like. Does it look similar to the SPY? It made it right up almost to the exact type of an area here. You can see the wave 4 is a little bit above 330. So I think this one's slightly more misleading because with the SPY, you know, we take a look at that and the wave 4 is right at the 420 level, which is the resistance level here. The wave 4 tops a little bit above 330, which is the resistance. So we came up and hit that. And we look at the moving averages, same thing here. We're a little bit overbought a couple days ago. So let's see what the volume looked like there. Now, the interesting thing is the volume was better on the diamonds. So that moved to the downside. You take a little more of a look at that, even though we still were rectifying an overbought condition. He's like, yeah, that was some decent volume. Look at last time we had average volume was going all the way back to June 22nd. So you have to pay attention to that on that reversal. Now, does that mean that the Dow is a little bit weaker than the SPY? Well, I think you'd have to take at least a look at that on the diamonds, but we're still above the 10-day moving average. So you don't really start to think that, hey, maybe we are on a new leg lower until we break below the 10-day moving average. The diamonds, same 61.8% fib extension on the wave 5, pretty much the same area, 38.2%, just a little bit above that on the wave 4 corrective move. So the Dow and the SPY are pretty much in lockstep. It's always nice when that's going on. The one that's been the outlier has been the Qs. They had a pretty nice move, also right up to resistance, but again, overbought when they got to resistance there at 320. So we've talked about that, 420 on the SPY, 320 on the Qs. Still a little bit more overbought here on the Qs. So a little more of a rest, noting that wave 5 extended much further on the Qs than it did on the SPY and the Dow. We talked about the underperformance in an arena of rising rates. And if we take a look and bring the volume down, low volume on the Qs as well, but still quite a bit overbought. It really is hard to forecast whether or not we are going to break above these resistance levels or turn around and roll over. So when it's in between like that, as I said, good time to, maybe throw a little speculative stuff here or there, or just be patient and wait. There's plenty of moves to make once the direction becomes more clear. So looking at the IWM, right up to 190, that's what you would expect. We have this trading range there, 170 to 190. So we went right up to 190. So bouncing off 170, right up to 190. Can we break above 190? That's going to be the issue on the IWM. I don't think it's going to do it without the SPY and the Dow going with it. But we're there. It's tiny bit overbought still. We didn't get quite as overbought on the IWM as we did on the SPY or the diamonds, but or the Qs for that matter. But still a pretty nice move right up to the 190 level. So really interesting there. All right, Zach mentioned the Bitcoin and Ethereum, the crypto. So let's take a look before we go to the international markets. And as Zach said, we are still trying to get above 24. Just Bitcoin cannot get above 24,000. Just boom, 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 keeps hitting its head against that level. And you can see this tight trading range that we have here between 20,000 and 24,000. Just a really tight range here. We went up, hit it, came back to just about 20,000, ran up again, and now we're backing off again. If we can get above that, I think 28,000 happens very quickly. And there's obviously some shorts in there that are trying to keep it down, noting that because of this, how vertical that move was from 28 to 24, it will be the same likely if we break above 24. In other words, we go from 24 to 28 rather quickly, and then we'll see, because that's really where there's a lot of resistance there. So we tried to make a run here off this support, couldn't get above 24, taking another shot at it, turn back again. Can we go this time? We'll see. And then looking at Ethereum, Zach also mentioned this one had a better bounce, and it did. You can see there was a nice run there off of this support right in this area here around 1200, and nice move up, filled this little gap here right up to where the area of resistance would be right there. Makes a lot of sense. It did exactly what you would think, but a lot of resistance in this area here. And so that's right around 1800 is the resistance area on Ethereum. Can it get above there? Well, it got turned back this time. So let's look at the 10-day moving average. We're still above the 10-day moving average, but that's going to be a lot to move through. Anywhere between here and 2000 is a whole bunch of congestion there going back from May. But if it can get above there, this is what you want to look at. If Ethereum can find a way to get above 2000, you're at 2800 in no time. Maybe you get a little bit of resistance here at 2500, but up here is another level at 28. So let's say that we run to 25 quickly, and then maybe eke our way up to 2800. So the key level to watch there is this 1800. If we can break above it and then get above 2000, so we get above 1800, and we still got to get above 2000. But if it can, you probably see 2500 maybe within a couple days. Could be one day. But at this point, we have a wave 4 labeled. We're in a wave 5 impulse to the downside, and we'll see if we turn around and head back to the downside on Ethereum. But pretty impressive bounce, at least from the 1200 level. Can it carry out from that or not? We'll see. But I just wanted to highlight the fact that Ethereum has outperformed Bitcoin, the platform versus Bitcoin in the crypto world. And we'll see over the next few trading days if we turn around and make another run at these resistance levels, or do we have to come all the way back down to support? So with Ethereum, it'd be all the way back down to 1200, and then with Bitcoin back down to 20,000. We're going to learn a lot in the next couple of trading days. So maybe by Friday, maybe by the end of the week, maybe Thursday night at the insiders meeting for our alert subscribers, then we'll have some more answers to not just our markets, but maybe in the crypto world as well. So taking a look at some of the international markets, look at the EWA in Australia. And taking a look at that, we turned back at 23, but that was one nice run that we made in the Aussie market there, coming off that wave 3 low. But look where we bounced our head, right at the 38.2% fib level. And also, in addition to a fib level, we had some resistance there from January with that wave 5 low, tested it again there in May, came back down, went right through it in June, but still level there of resistance, and that's where we've been turned back. Also above the 10-day moving average though. So all these are run up to resistance. We've rectified oversold conditions. This is where the rubber meets the road. Now we find out. So all the markets have bounced off of oversold conditions, and now we're at the point where, show me the Missouri thing that I talk about all the time. Can we break above these levels? And I've been saying for the last couple of weeks, not without more volume. More volume has to come in. But then, just as the caveat, it's kind of a self-fulfilling prophecy. If we're able to move above those resistance levels, the volume will come in because there'll be a lot of short covering. I'm not the only one that can see these levels of resistance. Everybody can see them, and that's where people have their shorts placed of all the trading algorithms and electronic trading, etc. They all set them up at those levels, and so if you break them, then everything triggers, and you'll see a pretty decent short covering rally. Let's see what it looks like in Canada for our friends up north. And we ran up to 35. So same scenario here, coming off an oversold condition down there, right up to, kind of wanted to see if we could maybe come up and fill one of these gaps. We got ours filled here on the SPY. We filled both of those downward June gaps. Not so in the Canadian market yet. So we ran up to resistance at 35, which was that wave 3 low in May. That makes sense. We are above the 10-day moving average, had gotten a little bit overbought there. Same thing on the 29th of July. And so we've turned back a little bit. Perhaps we're just rectifying the overbought condition here. Resistance area is a good point to do that. If we can get back above 35, it's a negative that we couldn't hold above it. I know we were overbought there on the 29th, but it would have been better if we could have stayed above 35 if you're bullish on the Canadian market and let it consolidate there, but not a whole lot of harm done because we're still above the 10-day moving average. If we can get back above 35, we should be able to make a run here up to 37 pretty easily. So if we do break above these resistance levels, again, these moves are going to be pretty quick. So they'll be pretty significant moves. Keep your eye on it and be ready to go, because I think they're going to be big moves in a very short period of time, and you don't want to miss them. You get these big short covering moves breaking through resistance, and the moves are so short-lived that if you don't jump in, then you may miss the moves. So watch those rather closely. Looking at the INDA, so taking a look at India. How impressive is that? Still overbought in India. Just wow. Coming off of this wave 3, we have labeled the wave 4, but we're the 61.8% fib level, and we're overbought. So I think we're going to take a little bit of a break here in India. And if you look at where we're sitting there, also makes sense, right up around the 44 level, which is where there's resistance. So really impressive move here, almost vertically. So that's never good. I don't like these vertical moves. So I would think that it's very likely the INDA comes back, probably back down towards 42. See if it can hold there. Would be bullish if it could hold at 42. And I know that sounds counterintuitive that a move from 44 down to 42 could be considered bullish, but we're overbought. That's a level of support. That's also where the 10-day moving average is. So coming down and hitting 42 and holding there would be considered bullish, even though it's a downward move. This vertical stuff won't last. So if it continues to go vertically up, then it becomes a good short. We'll just see, here's a perfect example over here. This vertical stuff here, when things go vertically up, they come, say along with me, you've been watching these, vertically back down. Same exact scenario, but boy, does that look really impressive. All right, so looking, continuing in our international markets, not so impressive is the EWG in Germany. And, we've just been highlighting this for so long that this market can't catch a break over in Germany. And now here we've labeled the wave 4 right at the 38.2% level, right at a major point of resistance. That's pretty difficult. This will be in a very likely area to hold and probably come down and label that wave 5. Changes if the EWG can get above 24. If we can break above 24, then we still have these gaps here, and perhaps we can make a move maybe as high as 27 up here where there's some significant resistance, but we got to get above 24 meaningfully first, and that just doesn't look likely at this point in time. We also have the 50-day moving average right there, so it's got to get above all that stuff. It's a lot of work for the EWG to do, but if it does, it'll be pretty bullish and it'll be a very strong signal. And as I said, you probably see 27, but that's a ways down the road. We got to get above 24 first, breaking that fib level, breaking above the 50-day moving average, etc. Right now, I would say the odds probably favor this rolling over and continuing down into a new wave 5 low. So that covers off all the international markets. We talked about a little bit more on the cryptos by adding in Ethereum. And now let's go ahead and take a look at some of our past case study considerations and previous trade finders. We look at Reliance Steel, which was back on the 3rd of May, and then it started down. As I said, we did use this one as an alert to our alert subscribers at EWO. We changed it to bearish, so we adjusted that. We do that when warranted at Elliott Wave options, and then you can see here that with the 10-day moving average, this reversal here hit the 10-day moving average on the low. So even though we had a reversal day today, doesn't mean anything unless we break below that 10-day moving average. If we do, we're also at a point of resistance here right at 190. So if we reverse there, you can see that we have a bit of a downtrend there. We keep making, but we have pretty significant lower highs there, pivot point there, and there. So Tom and Mark trendline fans can appreciate that, looking for these pivot points for drawing your trend lines. We've got that set of lower highs, and we could turn, and that would certainly indicate economic weakness. We've had a lot of earnings reports, and it is all over the map based on how the market has looked at earnings. Some earnings have been poor and they've rallied. And we highlighted some of those last week and over the weekend too, with Amazon, Apple, etc. And then there's been some good earnings reports that have reversed and headed down. It's hard to know how the market is going to handle those things. Here's an example. HCO had a good earnings report. They beat earnings, and we held in there on the day of earnings, and then reversed and headed back down. And we're at a level of support, and we are bullish on this. I think this could be a good level to add to this because it's a pretty good level of support. And we take a look at volume. There's above average volume. So people that have wanted to sell on these 3 days in a row probably sold. In other words, maybe the sellers are exhausted. We're oversold at this point in time. And we're at a level of support. So we could potentially find a bounce. But the market didn't like a good earnings report. They'd be like 30 cents. But they sold off anyway. Mosaic came out today, and we did reverse a bit, but they had a miss on earnings, but they came out and said, oh, but it's supply chain things. And so, dealing with what's going on in Ukraine, et cetera, that all makes sense. So the market kind of forgave them. We didn't have a significant move lower yet, but that still looks really tedious here as far as the potential now of being below 60, that we could just, if it doesn't hold here, then it comes down to 45 rather quickly. It wouldn't take long to get down there due to the fact that it didn't take long to get from 45 to 60. So you look at that for if you break a level of support, how quick does it come down? Now we do have a wave 4 labeled here, right around 50%. That's been holding so far. Can it continue? And we'll see over the next couple of trading days. But we also have a pretty good downtrend line working there as well on Mosaic, even though it hasn't really broken hard to the downside yet. On July 5th, we looked at Dollar General. We said 260 would be the target. We didn't quite get there. We're still trying. It's hanging in there pretty well. We got a little bit overbought. We're back down here. So 260 is still there. So this one still looks pretty good. Meritage Homes, we looked at this one on the 12th, and 87 was our target, and we got all the way above 90. So that one did what it was supposed to do. So let's go ahead and cross that one off. That was a nice move. It reversed today, but you should have been out already because it got above what we were looking for. So we'll go ahead and take that one off. And then, as I mentioned last week, we looked at this, and it wasn't quite triggered yet, and we said this would kind of be viewed along the lines of the speculative portfolio. It was breaking below this 10-day moving average here, but it had gapped down, looked like it was kind of weak. And then we have broken back above the 50-day moving average. It hasn't moved that much, but it's moved enough to get above there. We are at a little bit of resistance here, but if we can put a little distance above 280, then I think you need to just walk away from this one. If you're watching this, again, said it was speculative, so really wasn't directly involved with one of our searches. So that, as I mentioned in last week's TradeFinder, would be considered kind of one of our speculative type things. So if you are following this, 280 is the key. If it gets above there, then you either flip it to long or you just walk away from it. But it has to break above there first. It did get back above the 10-day moving average. It's got back above the 50-day moving average. Both those things bear watching. When you see that, you want to see volume, and there really hasn't been any below average volume on the entire bounce. So if you are still short, you don't get concerned about that kind of stuff, a bounce up to resistance on low volume, even though it is above the 10 and the 50-day moving average. But that would be a lot more meaningful if there had been at least average volume in the move. And look at today, was just really low volume. So not a whole lot of volume across the map in today's trade, really, when you're taking a look at it. All right, so now let's go ahead and see if we can find a case study consideration for tonight. As I said, the last couple of weeks have been challenging, and that makes a lot of sense with what's going on in the market. We do have 4 potentials there in our impulse results. So let's see what we have here. They're all financials except for L3 Harris, which is a defense contractor. And so let's take a look at, I'm going to show you one from yesterday's search. So it doesn't really count because it's not on today's search, but it's something I think you'll find interesting. And we get questions in the Q&A on it a lot. So I'm going to share that one with you in a second. You might find it really interesting. But let's go through and take a look at these. So Silvergate Capital, isn't it interesting that with rates moving to the downside, you're seeing something in the financial world that is moving upward? That doesn't make a whole lot of sense, does it? You would think that maybe rates are going to move back to the upside, and we get the spreads widening again, which is what the financials need to make money. It's all about the spread because they borrow short term, lend longer term, and they make the spread difference. That's how it works. So when you look at the level here, trying to break above that wave forward isn't a 5-wave impulse to the downside, but really nice trick there above the 10-day moving average. You can see the ADX is moving higher. It's difficult when Elliott Wave doesn't jive with our confirming indicators, so we tend to stay away from those. If we're going to do an impulse trade, Elliott Wave needs to agree with the confirming indicators. So that's not something that we would send out to our alert subscribers. Something that interesting for you to watch if you want to. Taking a look at, really don't know what this is. It's an ADR. Symbol is TLK, and reversal day today, open higher, but that's probably overbought. Yeah, it's too overbought on the high. Resistance there at 29. See what the Elliott Wave pattern looks like. Same thing here. We're in a 5-wave impulse to the downside. So even though the DMI is showing that there's the potential for that to become disqualified, it's not yet. And until it does, now those become great trades. This is a little bit of commentary here. If you have a pattern, so you're in an impulse pattern and your confirming indicators are saying that, hey, we're moving up. Well, okay, we have been moving up. It's just telling us that there was some strength in that wave 4 move. That's no big deal. It was a corrective move back to the upside. But if you move enough to where you disqualify a pattern, then that tends to be a pretty good entry, because you have your confirming indicators, you disqualify an Elliott Wave pattern, those trades can really move. So the things to watch, you just don't do them yet, because the Elliott Wave pattern, the impulse pattern, is telling you, hey, be careful. All we've done so far is have a nice wave 4 corrective move. That doesn't necessarily mean that we're all clear and we're headed to the upside. The confirming indicators are doing just that. They're confirming that corrective move to the upside, not necessarily forecasting something to continue higher. The Elliott Wave is the indicator that we look at for that. So nothing there, another financials. So probably going to be in the same boat as Silvergate, I would imagine, but let's see. Now this one is disqualified. So this is what I was just talking about. So that wave 4 there corrected to 80%. That means that that wave 4 is disqualified. So you take that Elliott Wave off, and we take all this other stuff off, and then we take a look at where we are with pretty nice setup there on the DMI, and we have resistance at 170. It's not a big move from here, 163 to 170, but it looks extremely likely to happen. So BR up to 170, that looks pretty darn good. I think that likely happens. But let's, before we go ahead and award that, the case study of the night, let's see what our defense contractor looks like. Maybe noise is being made there with everything that's going on overseas. So let's take our other indicators off, see what Elliott Wave looks like there. So we're in a corrective pattern there, no impulse pattern. So that means that we do rely, when we're in that scenario, we'll rely more heavily on our confirming indicators. The only issue here, because this looks like it's going to 260. I mean, that looks really strong. Like it's going to 260. So what is my pause? Well, my pause is that we're overbought right now. So we closed at 243 and down here around 230 or so, right in this area. 233 is the 10-day moving average. So we're 10 points overbought. So do you want to chase that? It's not necessarily a great time to chase that, but I think that's certainly something that you want to put on your watch list. And if we pull back a little bit, or even just come back and hold right here in this area of support around 240 and let that 10-day moving average catch up, man, that could be a great trade, moving from 240 to 260. So I think that you definitely want to put that on your watch list. I'm going to do that. But for tonight, we're going to go ahead and say BR up to 170. Wasn't that what it was? Yeah, up to 170. That looks really strong, but we're going to put in parentheses L3 Harris. So that was a L3 and Harris merged together. So LHX is the symbol there. And we're going to make a little note there. Once the overbought condition is rectified. Now that's likely going to happen before we talk again. So that's why I'm putting that in as a caveat there. By next week, we're probably already near 260, or who knows, maybe not. Maybe next week it becomes our case study consideration for the week. But BR looks to be the best of the group there. So see how that plays out. All right, with that, Zach, a little bit more time for Q&A tonight. Talking fast tonight, I guess. Well, we don't have a lot of previous case study considerations to take up time. Most of them have worked really well.
Yeah, no worries. And I'm sure everyone's always happy to have some extra time for the Q&A, and just wanted to say thanks for the second presentation today. I know that is a lot of talking, so I appreciate you taking the time to do this one as well. To add to that, Willie from YouTube said Primatine Mist would be good for you on days when you have to talk a lot. So that might be something to think about.
I appreciate that. The days when I used to do the live seminars, my voice was, or my throat, I don't know if it was throat or voice or whatever, was far more conditioned than it is now. But yeah, thank you. I appreciate that. I'll take a look at it.
Yeah, absolutely. So I see we do have a hand up from Randall, but unfortunately we don't do Q&A for this session. That will definitely be taken in the insiders meeting. We love having the voice interaction and having that overall dynamic. So definitely feel encouraged to ask the voice questions on Thursday. So we have a question from both YouTube and Zoom in regards to AMD. And so further,
yeah, they had a big news there. They took over from Intel, right? So I figured this was probably coming. We used to get AMD all the time, remember?
Yeah, oh yeah, it was almost every week. And
yeah.
Silver also asked, what does it mean for the semis for the semis for SMH?
Well, let's take a look at that. So that's a good caveat. Now we are at resistance is the only thing, and we've got a zigzag there that looks like it might be complete. So that was a pretty good move. Look at this double zigzag. How about this? So you got a zigzag in the wave A. So you had a complex A wave, and so that happens. So we won't even look at the A wave. We'll just go up here. But that is really cool to see that. And so yeah, we're kind of at. We've already moved a little bit above it. 61.8 was the target. We've moved a little bit above it, so perhaps we do go all the way up to 104 here. And if we're going to go that far, and we only had a 52% 5-wave extension, that means that we likely go back to the previous 4. So perhaps we go as high as 110. So we might even break above this 100%. Let's see what the DMI. Oh, that's beautiful. Yeah, this looks really good. That's as good of a confirming DMI as you could ever expect to see. So you're in a zigzag pattern, which you know how much I like zigzags, and we haven't hit the C extent. Well, we have passed the C wave extension. Sorry, we're looking for the extended C wave. And so when you're looking to see if you're going to have an extended C wave, that's when we look at the DMI, and it's confirming that that's likely. So I think we probably go to 105, and with that, if it's going to go to 105, is it going to stop there? Maybe we need to rest here a little bit because there is a little resistance there at 100. It's one of those whole numbers. We are overbought. You can see from the 10-day moving average. So perhaps you're a little bit patient on this for a day or two, considering that we're overbought and we're at resistance. But any sort of a pullback, I think, is an opportunity. Maybe even come back and test the 38.2% fib level, because that's where the 10-day moving average is. And there's some support there. But this looks really interesting. You get any sort of a pullback here, and I think you have a pretty good entry up to 105 or 110. Yeah, I thought there might be some interest in that. Great Elliott Wave stuff there too. So glad people suggested that one. Love it when we can highlight all the Elliott Wave technical stuff in these Q&A sessions.
Yeah, absolutely. That was a great.
Oh, the SMH. Sorry.
Yeah, no worries.
Let's see, what does that mean for that? Well, the semis are pretty similar, and of course, you know, that can be a sector that leads the market. Where's the leadership going to come from? Perhaps the semis or semis. Semis sound like trucks. The semis lead it back higher, but we're at resistance at 240. But if you watch this, let's see what the DMI is showing us here. That looks pretty good as well. If we can get above 240 on the SMH, then that probably makes 260 really quick. And we may not stop there. We may go up here to the previous 4, but we had 116% extension, which means we don't have to go back to the previous 4. You only have to go to 61.8, and that's right at 250. So somewhere in the 250 to 260 range. And if we can break above that, then perhaps we do go all the way back higher. So we have a good confirmation out of the DMI, but we're at resistance here. We're not that overbought, not nearly as overbought as we are on AMD, but pretty strong looking moves there from both AMD and the SMH, even though they may need to rest for a day or two. So I wouldn't be surprised to see some short-term pullbacks, but long-term looking decent. And man, if the SMH can break above 240 and move, it's hard to imagine that doesn't in some way pull the market with it.
Absolutely. Yeah. Thanks for that insight, Rob. That was a great segue into SMH. It'll be interesting to see what happens. George would also like to look at PFE as well.
Well, we're changing from semis to drugs. So we'll go with Pfizer on the NYSE. You know, it doesn't move a whole lot, right? Pfizer just doesn't move a whole lot. Obviously, it did during the whole COVID thing. But since then, since January of this year, we've just formed this gigantic triangle. So we have a really nicely formed symmetrical triangle, but it's still kind of wide. I mean, it could consolidate a little bit more, and the ADX got really low. Wow, look at that. It got down to 10. So it's already started to tick up a little bit. If you've heard my analogy in the past, and we haven't talked so much about the triangles because the VIX have been so high, but used to talk about when you have the triangle formation and the ADX has gone very low and started to tick up before the breakout occurs of the triangle, is kind of like the lava underneath a volcano, where we don't see, you know, the volcano looks really quiet and tame and peaceful, but underneath there, the lava's boiling and we're getting ready to have the volcanic explosion. So kind of the same thing here. When you see the ADX start to tick up before you get much of a breakout move, sometimes it's a precursor that, hey, we're ready to go. I wouldn't be surprised to see us consolidate right around 51 for even another week or two, or we could break out tomorrow based on that. But it does look like something's going to happen on Pfizer, and it's due, right? Because it's done really not a whole lot for the entire year, but I think you're going to see something. Look how that 10, 30, and 50-day moving average are all basically at the exact same spot, right there around 51. So yeah, I think you're going to see a move in Pfizer very soon.
Yeah, quite possibly. And as we mentioned in previous sessions, if this monkeypox quote unquote pandemic starts to increase, then who knows what's going to happen with all these vaccines and
yeah. Are we going to produce more smallpox vaccine, you know, or are we going to make a new one? Or yeah, it's going to be really interesting to see. It's a good point.
Absolutely. Next up, we have Manuel from YouTube. Roblox RBLX ascending triangle wedge from a descending channel.
Well, let's take a look. This is, you know, just from a fundamental, and we don't talk a lot of fundamentals here, even though we're not negative on fundamentals just because we're primarily technicals. But in our searches, I think it's good for everybody to know that there is a fundamental base. If you have a stock that is technically bullish and fundamentally sound, that can't be a negative, right? It has to be a positive versus a chart that's just technically sound and maybe they don't have good fundamentals. So it makes no sense not to at least consider the fundamentals, even though we primarily look at Elliott Wave and technical indicators. So we do consider fundamentals. We just don't talk about them a whole lot. So anyway, taking a look here and seeing this breaking to the upside above 40 is pretty impressive. You look at the 10-day moving average there. That looks really good. I think we see 50 here probably pretty soon. And then we're going to have to wait and see. The ADX is moving higher. It's almost to 40. So it's what it's telling you. It doesn't mean that this move is over, but it's telling you the strongest part is almost over. Not quite there yet. So I think we do see 50, and then we have some resistance there. But if that positive directional indicator can get back on top there, and the ADX continue up, it could continue higher, because it's hard to imagine that we get to 50 and then we don't look at this gap here on getting filled. So I think we see 50, and then we have to take a look at it again and see if perhaps we can break even higher, maybe up to 65 or so, and fill that gap from February. But looking really, really interesting now. So yeah, I think you have a couple more dollars to the upside. It's a little bit of a doji there, not a real great one. So I mean, 40 support. As long as it stays above 40, you're still bullish. If it breaks below that, then the thesis changes. But for now, that looks pretty good. So again, I think we hit 50 and then reevaluate and see if there's a shot at going up and filling that gap. It's going to happen at some point. At least percentages would say so. All right, I'll shut up so we can get a couple more.
No worries. Yeah, we'll try to get as many in as we can. So we have a request here from Chris for Mr. Norris. Good evening, Mr. Norris. If you have time,
Got the wrong hat on tonight, though.
Oh yeah, it didn't have the full outfit tonight, but I think the resemblance is always there. Can you look at ENPH? I'm thinking it's way overbought, nearly vertical above its 12, 20, 50 SMAs with gap below. I bought 300 puts before today's close.
I think you're 100% correct there. I hate that vertical move. It's got two gaps, and I think you're spot on. You know, sometimes they go sideways a little bit. So this is where you take a look at the DMI and you're like, yeah, it's going to continue higher. But that's when I turn that off and you come back and you look at this, and these vertical moves just don't last. What goes vertically up often comes vertically back down. You've got two gaps here. You're well above the 10-day moving average. I totally agree with you. It's overbought. The best case scenario, I think, is it comes back to 260. And it likely comes down and tests 220 because there's so much support there. And that still wouldn't be considered a negative because it's just labeling a wave 4. But I think you got a pretty good bet there with buying the puts. That looks really interesting to me as well. There's no doubt that it's overbought. So even if it only comes down to 260, you still have a nice trade there.
Yeah, absolutely. There's been some talk about that in the YouTube chat here as well, with the big vertical move up and gaps below. Looks like it's
Yep, that's a good one. That's what I like about this Q&A and the chat and everything, sharing ideas. These trade finders are so much fun. I hope everybody enjoys them.
Yeah, the dynamic's great, and having the change in perspective from everyone across the world is very beneficial to everyone. So we have a question here from Randall. In honor of Enshrinement Week, can we look at HOFV and see if the trend has finally changed?
Maybe. We're overbought right now, though, at $1. And so wonder if Randall's the one that asked about this before. I know this was brought up in the past, but the only issue here is you're at a point of resistance, a little bit of a doji there, and we're overbought. So I don't think that we can bust through that dollar yet. You usually don't go through a major point of resistance when you're in an overbought scenario already. If it does, then it usually doesn't hold. In other words, if it does break above $1 tomorrow, you don't say, oh, okay, we made it. You got to be careful because a lot of times those don't hold. The DMI looks good, so maybe we just have to pause here a little bit and let it catch up. But getting above $1, there's really not much stopping it to $1.25. And if you can somehow get above $1.25, then you're off to the races here. You know, there's not much in the way. You know, $1.75, $1 there, you know, every 25 cents, there's a little bit of resistance. So it's not going to be a straight shot higher, but you could have turned the corner here. But we're overbought right now. It's got to get above $1. It probably rests for a day or two. If it does break above it, don't jump in because I doubt that holds. Let that 10-day moving average catch up. And then perhaps you have flipped the script here. The key will be above $1.25. Then you can breathe easier. But getting above $1, it probably goes to $1.25 rather quickly. So yeah, a lot different look than from before. So thanks for bringing that one up again.
Absolutely.
All right, it's 10 o'clock, but let's do one more, Zach, if we can.
Much different looking chart. And yeah, no, we'll see. If you don't mind, I'll ask you to do 2 symbols here to wrap things up. I know this is your second webinar again that we mentioned earlier. So thanks again for the 2 hours you provided, but we'll end on these last 2 from Marcus. If you have time, please show us Apple can't break 163 for resistance, and then Boeing. Thank you, Chuck Norris and Zach. And I will say you're very welcome. Thank you.
Okay.
Don't forget the like button for Rob as well, as we've already mentioned. Thank you all.
Yeah, well, the problem was it gapped, right? So we had the gap up, and that was the kiss of death as far as getting above there. At least it got above 155, which is where it had really been struggling. You know, if you go back and look there, 155 was support resistance from last year, not even just this year. So it got above that. So coming back to test 155, I don't think is out of the question. In fact, you would want that if you're bullish on it. you would want it to come down, fill that gap, get back to the 10-day moving average, hold at 155, and then you've got a chance to move higher. And then I think you probably see 170. But gapping up, being overbought, there was just, this is what I'm talking about, is they just don't hold. When you go vertically and you gap, you just get overbought. And so it comes back down. That wave 4 is at 70%, is pretty close to getting disqualified. So I don't know about the wave 5 extension down there. Something economically would have to drastically change, and maybe China, Taiwan, something could turn that back. But it does look like we kind of want to come back and test 155 before moving up. But that's a good thing. Again, even though it couldn't get through it before, there was no way. It was just too overbought. So I think Apple becomes very end as a really good looking forming DMI there. I think you root for it to come back to 155 and hold, and you've got a great trade up to 170. Boeing was the other one, right? So Apple and Boeing, and Boeing, very similar chart. They're probably going to be able to start sending those Dreamliners soon. Again, getting the FAA clearance, but we got this gap here. So where we wanted Apple to come back down to 155, you kind of want Boeing to come back to 160. We're filling this gap here from April. But if we can get a fill of the gap there at 160, hold there and turn and head back to the upside, we could have something really, really good in the works there. So that could look quite interesting. So yeah, do we look at the DMI on this one? Yeah, the DMI looks good there as well. So it seems like a lot of the bad news is behind Boeing now. The Dreamliner is going to come out, and then the Max will be next. So it seems like probably a pretty good time to be looking at Boeing long term. We have one of our alert subscribers, Pankaj, that pops in here every now and then as well. He's always looking for leap opportunities, and I think Boeing could be in that area with everything they've dealt with. The other one I wanted to show you tonight was NVIDIA. You can see that it's moved back up to 180. That was one we talked about as far as probably a pretty good long-term look there as well. And breaking above 180 is pretty key there. So something could be happening here on NVIDIA. I know that's one of your favorites as well, Zach. So we'll see if we can hold that 180 level, and then perhaps if some sort of a significant move. 220 is really the next point of any kind of resistance here. So moving from 180 to 220 would be probably a pretty easy move out of this one. So thanks everybody. Apologize for the coughs, but as we've been saying, second one of the day. But sign off the same way every time. Really mean this, passionate about it. It's said humbly that we really appreciate you spending your time with us. Time's the most valuable asset we all have. We do our very best to make this an educational, informative use of your time. Thanks again so much. All the various social media services, thank you for joining us. Have a great week. Look forward to talking to you again.